Alright, hello and welcome to Camel Finance. I'm your boy Camel and been away for a couple of days, went on some fishing trips, but it's time to get back into this. Shopify competitor BigCommerce integrates Bitcoin as payments. So I love to start my videos with one of these. Bitcoin continues to be adopted and I love it. Over in Russia, businesses can choose which cryptocurrency to use to pay for international trade. So this looks to be done now and you better believe a lot of money is about to flow into this space. The Chinese court has ruled that Bitcoin and crypto trading is legal, but not for payments. Kind of a strange interpretation, but of course they have a CBDC and social credit score system over there already. So likely they just don't want anything competing with that. Of course, there is absolutely nothing they can do to actually stop people from transacting peer-to-peer with something like Bitcoin. Vietnam is leading the way with Bitcoin and crypto adoption. The future is bright over there for sure. The Ethereum merge is now of course complete. So please enjoy the benefits of your CBDC brought to you by the ERC20. If you don't know about this, it's about to get worse if you're an Ethereum bull. Here's more proof of disguised whales. According to our Ethereum post-merge inflation dashboard, over 46% of the proof-of-stake nodes for storing data, processing transactions, and adding new blockchain blocks can be attributed to just 2 addresses. This heavy dominance by these addresses is something to watch. This is the problem with this merge. This merge has basically shown that Ethereum is going down and is going down to basically worthless. And I say this with confidence because this chain has been pwned. Like, if you don't know what pwned is, this is owned with a P. And so here you can see, typically used to imply that someone has been controlled or compromised. Look who's celebrating this. So if I've lost you up to this point, I was starting to lose you. Just hold on a second, because it is time to sell our Ethereum. I'm pretty convinced of this now. I've been saying this for a little while, but look who is celebrating this. Okay? And it begs the question, doesn't it? The same people that want you to own nothing and be happy are celebrating this merge. Ask yourself why, right? It's because they're about to roll out CBDCs on this chain that they completely own and dominate. With 2/3 majority vote by the stake, it is decided to temporarily increase staking rewards to a special ETH address to support Ukraine. So this can actually happen, right? Now this is satire, this has not happened. But let's just scroll down here and make sure we're all on the same page. The energy reduction of POS gets heavily celebrated, while the trade-offs are barely mentioned by the community, the Ethereum community. While the Ukraine support above is an obvious meme, the slippery slope is that proof of stake leads to some clever way of inflating the money supply. Isn't this what crypto is supposed to be about? Isn't this the entire design of Bitcoin was to take away the power from the people that can just print money and inflate everyone else into poverty? This is why Bitcoin has a hard cap supply. If we're moving back to be able to just infinitely create more of whatever this coin is, why do we need that? What's the use case for this? Proof of stake should be seen as proof of privilege. The privileged who have enough stake don't actually do anything other than comply in order to receive free money on the benefit of others. This comply mechanism over the time is a slippery slope towards centralization and then inflation. The problem is at first hand, everything looks like it's functioning well. This can lure a lot of people who are sensitive towards energy usage. And we have a government propaganda and carbon footprints. So it's no secret if you speak to anyone that doesn't really understand Bitcoin, they say, oh, isn't it bad for the environment? That's because this is a perpetrated narrative by the media. It's completely false, and proof of work and Bitcoin will be carbon negative likely by the end of this decade, whereas the proof of stake can never even cross into negative territory. While Ethereum always piggybacks Bitcoin's success, they are now incentivized to go along with misinformation regarding the proof of work. And so it is likely that we're going to see more and more of this narrative of Bitcoin is bad for the environment. Root says, while he doesn't believe that proof of stake is a good trade-off, he's not against Ethereum exploring new avenues with different trade-offs. The reason he respects altcoins from a scientific perspective is how can we know if something doesn't work without trying? So there is always an outside chance that this proof of stake switch will yield a very successful Ethereum chain. But I'm not betting on that. And someone has an honest question here, which I think is worth just touching on before I move on. They say, I hear a lot of community members saying proof of stake leads to centralization, but as I understand it, the difference between centralized, privileged, majority stakeholders simply replace the office of major mining pools. Is this not simply a change of centralized agency? And there are several differences. Proof of work is reward-based and proof of stake is penalty-based, where the latter results in comply behavior. In proof of work, someone can switch pools instantly, not the case with proof of stake. And proof of stake is permissioned, whereas Bitcoin is permissionless. You don't have to ask anyone, you don't have to qualify in any way, shape or form. You can just run a node or run a miner. and you can pull your miner, and if you pulled it, you can just pull it and switch pools at any time. You can go solo at any time. There's no contract, there's no tie-in. And this is the whole thing with people that say, oh, well, all the mining pools are centralized in China. Again, it's BS. They might be based in China, but the miners, if you decide to buy a miner and pool it in China, they can't use that to attack the chain. Okay, it's still your miner. You can still leave at a whim. You can still switch pools anytime you want. Okay, it's not this. This is not the same thing. So make sure you know about this, because I'm pretty sure we're about to see an enormous campaign and an attack on the proof of work style mechanism. So I don't know if this tweet is satire, but let's humour Mike for the minute. The merge completed just over an hour ago, and he's already heard from 6 billionaires and 2 institutions who want to sell all their ETH and buy Bitcoin. Will it be a trend? I think it will. So whether this guy is just talking nonsense and he hasn't heard from anyone, whether this is a joke or not, I can tell you that I've reduced my spot position to near zero. Okay, near zero relative to the rest of my portfolio. Am I going to be looking for longs and trading Ethereum? Yeah, you'll see me and continue to see me do that on the channel, because it's quite an easy way to make money, I think. However, do I hold Ethereum for the long term? No, not anymore. I do not believe in this coin. I have in the past put on friends and family and told them to accumulate this coin and have some exposure to this coin, and that was back in the hundreds neighborhood. However, I'm pretty close to phoning them and getting them to get rid of that. I've already spoken to some of them and told them to reduce exposure where they had a lot. I think holding 1 or 2 Ethereum, like that's fine if you've got a relatively small portfolio, or holding sub 5% of your portfolio, whatever that may be, I think is okay. But I would not be surprised to see this coin go back to its C19 lows. And a lot of people think that's absolutely nonsense. But this chain is nonsense now. It's useless. It's absolutely useless. Like, unless you want a fiat type blockchain, why? It just doesn't make any sense. And people are basically, I think they're only going to either switch this to ETH killer chains, which I don't like anyway, or that money's going to flow to Bitcoin. This has just been a giant advert for Bitcoin and for the necessity of having a chain that cannot be owned, controlled, and dominated. So lastly, congratulations are in order, because JP Morgan has completed an Ethereum merge, controlled and dominated this blockchain, and they will be continuing to reap the benefits, just like they reap the benefits in the fiat currency system for years to come. So well done for them. They're the true winners here, and all the plebs that are holding Ethereum are going to find out the hard way pretty soon that they have been scammed. So here is a nice summary. Let's just quickly watch this.
Do you have any concerns about a large nation state that has interest in just actively destroying Bitcoin to make their own, super rigs and design chips and just throw hundreds of millions or billions of dollars to intentionally disrupt the blockchain?
Yeah, I don't worry about that at all. This cannot be done with Bitcoin anymore. This is something that can only be done with nascent altcoins. Bitcoin has achieved a level of computing that no single nation state can overthrow it through computation alone. The effort to do so would require a massive covert operation of chip fabrication, then the coordinated assault that would give them dominance over the next block for 10 minutes until we kick those bastards off the network, rework the protocol around them. They would be revealed. They would have lost $1 billion doing this, and all they got to do was one double spend.
Do you see the importance? Okay, I've been harping on this for long enough. Let's get back to some news and then some charts. The ECB has selected Amazon to develop its digital euro payment system. So is this going to be some AWS, Ethereum backdoor CBDC? Quite possibly. That remains to be seen. I'm sure I'll be updating on this soon enough. We can have some fun with analogs. And you can see that there are plenty of bear fractals, and I think the market is hyper-focused on these bear fractals at the moment. However, there are plenty of bullish ones too, as you can see. So we are still kind of at a 50-50 type coin flip scenario. The Fed could pivot. If we're going to see a pivot, we've got Wednesday's FOMC. We could maybe see Powell kind of save the markets. Not many people at this point believe the Fed's going to. The Fed was losing control, and we got a nice big rally and a nice big pump, and the market was front running a pivot. They've done a very good job at stepping in there and making sure everyone knows, no, they're serious about hiking. They're serious about fighting inflation. The stock market's got to crash, and the markets have subsequently cooled off. Everyone is hell-bent and sure of themselves at the moment. I mean, I have no idea. Nobody knows. I don't know how anyone can be so sure we're going to new lows, because it's 50-50, as the fractals show. It's 50-50. No one knows what the Fed's going to do, right, as well. It's 50-50. They can crash these markets to zero if they want to, or they can pivot and save the markets. I think they are too heavily incentivized not to save the markets. And that's why I've been so sure that we're going to see a pivot. Now, does it look like we're going to see a pivot this month or next month? No, it doesn't look like that now. That doesn't mean it's not going to happen, okay? So I have a thesis, and my thesis is clear invalidation when we take out the lows. We haven't taken out the lows yet, so let's keep going. Here's a nice fractal. Is this what we're going to complete? Are we going to just sort of trade sideways? Key is we don't take out the lows. Do we just kind of drop back into here? Maybe have a 42-day consolidation cycle that doesn't really do much, and then go. We could even have a downward 42-day cycle that doesn't take out these lows. We could come right back down here and then go. So, of course, we need to see what the Fed says in FOMC on the Wednesday. Bob Lucas, the king of cycles, has shown we've got a breakdown of this trend line, and this is not good. He says we can wish for a trap, but given where we are in the cycle, it's unlikely, and wishing is also not a strategy. And of course, he's right, it's not a strategy. We have also got, according to Bob, a failed cycle on the S&P. So this is, I've already mentioned, if we took out this low, that would be a warning flag. That would be the first warning sign. And if we lose these lows, then we are 100% definitely going a lot lower. So with that as a preface, let's get into the charts. Look, the dollar is still quite strong, but it's kind of looking a bit toppy now at long last. So anything can really happen here. Again, we're coming into FOMC. They can save the market or they can break the market. The stocks are looking like, is this just a sweep of the low? Are we going to recover this and go? If we're going to be bullish about this, then we really do need to see some strength come back to the market soon. We really do need to see risk come on. So this does not look like a hot knife through butter just yet. This definitely looks like taking the stop liquidity from the prior lows. If we measure the cycle low, to there would have been early, but to here, 45, slightly late. So we really could decide either one of these is the low. We really need to see how the price action goes. We've definitely got a nice break above this trend line would be a long for sure if we can get there. But of course, the Fed can still crash markets. And if we start to take out this low here and this low here, then we can entertain shorts with massive downside. But for now, I still think the path of pain is higher. We're kind of in no man's land right now. So whilst I'm looking for longs and mindful that I might have to go short, I'm definitely not looking to jump in at the moment. I've been saying the whole time, you know, if we see some price action that tells us we can get in, then we'll get in. But we're kind of trading in no man's land. We've had our first warning sign in the form of taking out this low. The NASDAQ as well, I mean, this doesn't look like a plunge. This doesn't look like fear. And then when we go to the VIX, you know, we've made a higher high, but we're still sort of above 26. So it would take considerable downside for the stock market just to keep the VIX in this 26 neighborhood. So we really do need to see a couple more candles across the board. We really do need to see what the Fed's tone is on Wednesday. Is it going to pivot to a softer thing? You've got to think, the market at the moment is certain we're going to see a minimum of 75 basis point hike, and 100% seems more likely. So anything sub 100, the market will likely interpret as bullish. So they, of course, have the power to crash these markets, but they also have the power to save them, and I do think they have a vested interest in saving them. I'm going to do a video tomorrow where I break down some mathematics for you, and I'll show you how that they will actually go broke in the not too distant future if they continue to hike rates. So I've been crunching numbers and crunching numbers. I've come up with them. I'm going to put that in tomorrow's video. So make sure you see that. I'm going to quickly breeze through these charts. Real is hanging on there. We've got to stop. Let the stop do the worrying. There's not really much I can do other than that. Leave that to go. This is what I mean about gold. Technically a failed cycle. Is this breakdown, retest and resuming off? Quite possibly. If it is, then it was time to open up shorts, I think. So this is stopped. We don't need this anymore. But a recovery of this line would be uber bullish. Is this just a massive head fake? Do we see the dollar come off on a dovish Fed during FOMC on Wednesday? And does this catalyze the rally? This is massive cognitive dissonance, isn't it? And there's no reason for gold to be breaking down where it is, especially if the stocks are coming off. But silver is telling a slightly different story. Look, it seems to have run that stop and then recovered all the way back up here. So that's an interesting look. Miners we're still in, aren't we? Barely, but we're still in. So we'll see how it goes. We are making higher lows, but we're also making lower highs. So continue to monitor, continue to push. Bitcoin looks like it's starting to round. So again, a dovish tone from the Fed, and we can entertain longs out of here, I think, with a stop either here or here. A little bit more patience and we'll get our answer. Ethereum not looking bullish at all. I've lost all faith in this coin. The more I look into it, the more it just seems like a trash coin now. So I'm going to continue to look for opportunities, but I just don't see them at this moment in time. I will, of course, update if I do see anything like that. XRP, look at XRP go. Breakout, retest. Now is looking to resume off. I think if you're not in here, not financial advice, but this would be an opportunity to add. So I've only got a starter position, as I've already flagged this before. And I think if we can get above here, I can go to full exposure. So we'll see what can happen here. Also, I've got a nice chart. Where is it? If you look at this here, this is ETH against XRP. Now, when I first made a video, if you can go back and find it if you want to. It's called something like XRP, just hear me out. And we were up here, and I said, look, if we get rejected off of this, then you can expect XRP to massively outperform Ethereum. And that seems to be what this chart is telling us. I've had the breakdown, look, lower high, and now XRP is massively outperforming Ethereum. So I think this could be the trade to exit the Ethereum into XRP, let this fall off a cliff as Ethereum dies, because everyone's realized it's a centralized blockchain that nobody needs anymore. And I think XRP, it might be finally its time to shine as it's breaking out of here. So again, confirmation will come above that. Targets are way up. We'll worry about that if we can actually get a breakout. But that is something I flagged a while ago. Lastly, are we going to see a double top from the yields? Quite possibly. So that remains to be seen. All eyes on the markets on Monday. We'll see how the closes go, because they will tell us everything. If they are bearish closes, then I think the likelihood that we are going to have any bullishness over the next couple of weeks is very low. But if we can get some bullish action out of these stocks and gold and risk assets in general, like Bitcoin and crypto, so on and so forth, if we can get some bullish closes out of those on Monday, then I think that sets us up nicely for some longs that will catch everyone off guard. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, turn those notifications on so you don't miss what's coming up over the next couple of days. And I'm your boy Camel. Take care. All the best. Cheers.